All right, so you want the inside scoop on HCA Healthcare stock.
Let's do it.
We're going to take a deep dive into a recent stock analysis.
Okay.
It's dated February 6th, 2025.
All right.
To see if HCA is worth your hard-earned money right now.
Yep.
No sugarcoating here.
Nope.
We're laying out the good, the bad, and the potentially ugly
Sounds good.
to help you make a smart decision.
Well, one thing that jumps out is that HCA isn't some tiny clinic.
Oh,
No, we're talking a massive network of hospitals and healthcare facilities.
wow.
Across the U.S.,
Okay.
they're practically a household name.
So not just big, but hospital empire big.
Exactly. Think acute care hospitals,
Yeah.
surgery centers, outpatient facilities,
Yeah.
you name it, they're probably in it.
Wow.
They offer a full spectrum of services,
Okay.
which makes them a pretty dominant force on the market.
Okay, so a healthcare heavyweight.
Yeah.
The analysis goes into HCA's key business segments.
Right.
I'm curious to hear how those are playing out.
Well, their core business is those traditional hospitals we all think of, the acute care hospitals.
Yeah.
But the report kind of hints that this segment might face some challenges down the road.
Really?
Yeah, where HCA is really focusing their energy is in outpatient and ambulatory services.
So procedures you can walk away from afterward.
You got outpatient surgeries, diagnostic imaging, all those things that can be done more efficiently and cost effectively outside of a hospital setting,
Makes sense. People are definitely more cost conscious these days, even when it comes to healthcare.
for sure.
So how is HCA's financial picture looking with this shift in strategy?
Well, let's start with the good news. HCA is definitely growing.
Okay, good.
Their latest quarterly report showed an almost 9% increase in revenue.
Wow, that's great.
And here's the even better part. They're not just growing, they're also profitable.
All right.
They're boasting some pretty solid profit margins.
All right, so they're making money and growing.
Yep.
That's a good sign, but you know what they say? If it sounds too good to be true.
You're right to be cautious. There's always another piece of the puzzle.
Okay.
And in HCA's case, it's their balance sheet.
Oh, no.
They're carrying a hefty amount of debt.
Like, how much are we talking?
Over $45 billion to be exact.
Whoa, 45 billion?
Yeah.
That's a lot of debt, even for a giant company like HCA.
It is.
What kind of impact does that have on their financial health?
That's where the debt-to-equity ratio comes in.
Okay.
It's essentially a measure of how much debt a company is using to finance its assets
Mm-hmm.
relative to the value of its shareholders' equity.
Okay.
A high debt-to-equity ratio can make investors nervous,
Yeah, I bet.
as it implies higher financial risk.
So should investors be hitting the panic button over this mountain of debt?
Not necessarily. The good news is that HCA has strong cash flow,
Okay.
which means they can handle the debt for now.
Good.
However, it's definitely a risk factor that needs to be monitored closely,
Right.
especially in the long run.
Okay, so it's like they're walking a tightrope.
Yeah.
They're managing for now, but any misstep could have consequences.
Exactly.
Let's shift gears and talk about valuation.
Okay,
Is HCA stock a bargain overpriced or somewhere in between?
that's the million-dollar question for potential investors, right?
Yeah.
One key metric to consider is the price-to-earnings ratio,
Uh-huh.
or PE ratio.
Yeah.
It basically tells you how much you're paying for each dollar of the company's earnings.
Okay.
HCA's PE ratio is currently hovering around 13 to 14,
Mm-hmm.
which is considered fairly moderate.
Moderate. So what does that tell us in terms of HCA's valuation?
It suggests that the stock isn't outrageously priced,
Okay.
but it's not a screaming bargain either.
Right.
If you're looking for a company with steady growth potential
Mm-hmm.
and you're not chasing some high-risk, high-reward play,
Yeah.
HCA's valuation might seem attractive.
Interesting. The analysis also mentions something called a price-to-sales ratio.
Right?
How does that factor into the valuation picture?
The price-to-sales ratio compares the company's stock price to its revenue.
Okay.
A low ratio can sometimes indicate that a stock is undervalued.
Uh-huh.
In HCA's case, their price-to-sales ratio is relatively low.
Does that mean HCA stock is a steal then?
Not so fast. It's important to remember that hospital margins are inherently slim,
Okay.
meaning they don't generate huge profits for every dollar of revenue.
Right.
So the low price-to-sales ratio might be more of a reflection of the industry itself,
Okay.
rather than a sign that HCA is uniquely undervalued.
Got it. So no clear red flags on valuation,
Not really.
but no guarantees of a quick windfall either.
Nope.
Now let's get real about the risks.
Yeah.
What are some of the things that could go wrong for HCA and its investors?
Well, no investment is completely risk-free.
True.
In HCA's case, one of the most significant concerns is rising labor costs.
I bet.
It's a challenge across many industries,
Yeah.
but it's particularly pronounced in healthcare.
Yeah, you can't run a hospital without skilled nurses and staff.
Right.
And attracting top talent comes at a price.
Exactly. Think about the nationwide nurse shortages, the increasing demand for qualified healthcare professionals,
Yeah.
and the pressure to offer competitive wages.
Yeah.
All of these factors put a strain on HCA's profitability.
It's a tough balancing act for them.
It is.
They need to keep costs under control while also ensuring they have the best people to provide quality care.
Right.
What other potential challenges are on the horizon for HCA?
Well, there's always the looming threat of regulatory changes and shifts in reimbursement policies.
Oh, right.
The healthcare industry is heavily regulated,
Yeah.
and any sudden change in government policies or insurance payouts could significantly impact HCA's bottom line.
So even if they're doing everything right internally, external factors could still throw them a curveball.
That's the reality of operating in a complex and evolving industry like healthcare.
Yeah, that's true.
And of course, we can't ignore the lingering effects of the pandemic.
Oh, right, yeah.
Elective procedures, which are often big revenue generators for hospitals,
Right.
they took a hit during COVID.
Makes sense.
How well HCA adapts to this new normal will be crucial for their future success.
It sounds like there's a lot to consider here.
There is.
Labor cost policy changes the evolving landscape of healthcare.
Yeah.
Are there any other potential risks we should be aware of when evaluating HCA as an investment?
Well, there are also some strategic moves that HCA is making
Oh.
that could be considered risky.
Oh, strategic moves.
Yeah.
Now you've got me intrigued. Tell me more.
On one hand, they're aggressively expanding their footprint
Okay.
by acquiring existing facilities and building new ones.
Okay.
This requires careful planning and execution,
Right.
as overspending could lead to financial strain.
Yeah, for sure.
On the other hand, they're continuing to push that strategic shift towards outpatient services that we talked about earlier.
Right. Trying to capture more of that cost-conscious patient market.
Exactly.
Seems like a smart move on the surface, but I'm sensing a but coming.
You're right. The question is, can they execute this transition effectively? Expanding too quickly or failing to manage costs properly could backfire.
So it's a bit of a high wire act.
Exactly. It's a classic high-risk, high-reward scenario.
Right.
But that's often the nature of business, isn't it?
Yeah.
Making strategic bets and hoping they pay off.
Absolutely. So after weighing all of these factors, what's the verdict on HCA? Is this stock a buy, a hold, or a hard pass?
That's the million-dollar question, isn't it? And as with most investment decisions, the answer is, it depends.
All right. I knew you were going to say that, but depending on what? Spill the beans.
It all boils down to your individual investment goals and your risk tolerance.
Okay.
What are you hoping to achieve with your investments? Are you looking for steady growth, quick profits, or something in between?
That makes sense. Different investors have different priorities. Let's say I'm a cautious investor
Okay.
who prioritizes stability and minimizing risk. Would HCA be a good fit for me?
Well, if stability is your primary goal, HCA does have some appealing qualities.
Okay.
They're a well-established company with a long history of steady growth and consistent cash flow. Plus, they operate in an industry that's not going away anytime soon.
True.
People will always need healthcare.
That's true. You can't argue with the essential nature of healthcare.
Right.
But we've also talked about those risks.
Yeah.
The debt, the labor costs, the potential for policy changes. How do those factors weigh in for a risk-averse investor?
That's where things get a bit more complicated.
Oh, okay.
Those risks are real.
Yeah.
And they could potentially impact HCA's future performance.
Right.
A cautious investor would need to weigh those risks carefully against the potential rewards and decide if the level of risk is acceptable.
So maybe not a slam dunk for someone who's super risk averse.
Right.
But not necessarily off the table either.
Exactly.
What about someone with a higher risk appetite?
Okay.
Someone who's chasing those more aggressive growth opportunities. Would HCA be a good fit for them?
Probably not their top pick. While HCA is actively expanding and making strategic moves, they're not exactly a high-growth tech startup poised to disrupt the market.
Right.
Their growth trajectory is likely to be more moderate and measured,
Okay.
which might not be exciting enough for investors seeking a rapid return on their investment.
So we've covered the risk averse and the risk taker. Talk about someone in the middle.
Okay.
Someone who wants to see decent growth but also values stability and isn't comfortable with excessive risk.
Yeah.
Where does HCA fall for that kind of investor?
That's where HCA becomes really interesting. For an investor who's seeking a balance between growth and stability, HCA could be a solid option.
Okay.
They're not a wild gamble,
Right.
but they offer the potential for steady appreciation over time.
Okay.
And they might even provide some dividend income along the way.
So it sounds like HCA is a bit like the Goldilocks of stocks.
Uh-huh.
Not too hot, not too cold, but maybe just right for some investors.
I like that analogy. It captures the essence of HCA.
Yeah.
They're not the flashiest or most exciting investment.
Right.
but they have strong fundamentals
Okay.
that could make them a valuable addition to a diversified portfolio.
This deep dive has been incredibly insightful.
Glad to hear it.
I feel like I have a much clearer picture of HCA now.
Oh,
But before we wrap up, I always love those aha moments.
yeah,
Those insights that weren't explicitly stated in the analysis.
right.
Is there anything else that you found particularly thought-provoking about HCA? Something that might spark some further reflection for our listeners?
You know what I found particularly interesting is how HCA's strategic shift towards outpatient services
Yeah.
reflects a much larger trend in the healthcare industry.
Interesting. So HCA's moves are like a microcosm of the changes happening in healthcare as a whole.
Exactly. And it raises some important questions.
Like what?
What does this shift towards outpatient care mean for patients, for investors,
Yeah.
for the future of healthcare in general?
Wow.
It's something worth pondering.
That's a great point. It's like HCA's story is just one chapter
Yeah.
in a much larger narrative about the evolution of healthcare.
Right.
What are some other big picture questions that investors should be thinking about as they consider companies like HCA?
Well, one of the most pressing issues is the aging population
Okay.
and the rising demand for healthcare services.
Right.
How will this demographic shift impact companies like HCA in the long run?
Yeah.
Will they be able to meet the growing demand while maintaining profitability and managing costs?
It's a lot to think about.
It is.
These are complex questions with no easy answers,
Right.
but they're crucial considerations for any healthcare investment.
For sure.
Wow, you've given me a lot to think about.
I'm glad.
This deep dive has been a real eye-opener. I feel much better equipped to make an informed decision about HCA now.
I'm glad to hear that. Remember, knowledge is power,
Mm-hmm.
especially when it comes to investing.
Absolutely. And for our listeners who are interested in digging deeper,
Yeah.
I encourage you to read the full analysis that we've been discussing.
Yeah.
Explore other perspectives.
Yeah.
And ultimately make the decision that's right for you. It's been a fascinating deep dive into HCA.
It really has. HCA's story is a window into the broader trends shaping healthcare today.
Exactly. And for our listeners, hopefully this has given you a solid framework for evaluating HCA.
I think so.
It's not just about looking at numbers. It's about understanding the bigger picture,
Right.
the industry dynamics,
Yeah.
the strategic choices, the potential risks and rewards.
Couldn't have said it better myself. Informed investors are empowered investors.
That's right.
So take what you've learned from this deep dive,
Mm-hmm.
do your own research,
Yeah.
and make decisions that align with your investment goals and risk tolerance.
Well said. Happy investing, everyone. And until next time, keep diving deep. But until next time, keep diving deep.